So take a quick second and really think about your own skills and education. If I were to ask you right now, who contributes more to a nation's national income? A worker in a factory or a software professional? It's a fascinating question, right? I mean, we intuitively know that the labor skill of a highly educated person is just higher. It allows them to generate more income and ultimately contribute a lot more to overall economic growth. But how exactly does a nation cultivate that kind of value from the ground up?
Well, welcome to this explainer. Today we're diving into the incredibly relatable and honestly super powerful concept of viewing human potential not just as a standard workforce, but as a high-yield economic asset. We're going to unpack the actual mechanics of how investing in everyday people completely transforms societies and drives modern economies.
Here's our quick roadmap for today. Number 1, what is human capital? 2, the sources of human capital. 3, physical versus human capital. 4, fueling economic growth. 5, capital versus human development. And finally, 6, the government's crucial role. All right, let's jump right in.
Starting with Section 1. What is human capital? From resource to asset. Okay, let's break down what we actually mean by human capital. Think about a physical resource, like a plot of bare land. On its own, well, it's just dirt. But if you pour investment into it, it turns into a highly productive factory. Human resources are exactly the same. Students are essentially the raw resource, and through investment, they're transformed into human capital. You know, your engineers, your doctors, your scientists. But here's the real catch. A society actually needs existing, highly competent human capital in the first place just to produce more of it. You literally need educated professors and professionals to train that next generation. It's this massive, continuous, compounding cycle of investment.
Moving on to Section 2, sources of human capital, building your value.
So how exactly do we build this value? Just reflect for a second on why your parents might have spent their hard-earned money on your schooling. They were actually making a very specific capital investment in you. Just like a company buys machinery to increase its future profits, individuals invest in 5 main areas to boost their own future income. Education is obviously the big one, but health is equally crucial, right? Because a sick laborer is forced to miss work, which means a massive loss in productivity. Then you have on-the-job training, where companies essentially pay to upgrade their workers' skills. Migration is another huge investment. People take on the hefty costs of moving to totally new cities or countries specifically to fetch higher salaries. And finally, there's information, spending the time and money to understand where the absolute best jobs in schools are so you can make the most efficient choices for your future. And you know, these concepts aren't just reserved for fancy corporate offices. Providing adequate training and education fundamentally transforms traditional sectors too. Like teaching a farmer new agricultural techniques, that is a direct investment in human capital that raises farm productivity, immediately increasing their yield and their income. All right, Section 3, physical versus human capital, the big contrast.
To really ground this somewhat abstract idea of human capital, let's contrast it with something we're all super familiar with, physical machinery. The differences here are actually pretty striking. Physical capital is entirely tangible. You can sell a physical asset, like a bus, on the open market, and it is totally separable from its owner. Human capital, on the other hand, is completely intangible. It's built right into the body and mind of the owner. You obviously can't sell a software engineer's actual brain or a bus driver's driving skills. You can only sell the services of that knowledge. The human capital is literally inseparable from the person who holds it.
So, why does this matter? Well, the absolutely crucial point is how the benefits of these two types of capital flow. Physical capital basically just creates a private benefit for whoever owns it. But human capital, that creates profound social external benefits for everyone. A highly educated person can effectively take part in the democratic process, which pushes the whole nation's socioeconomic progress forward. Or think about health. A healthy person who maintains personal hygiene literally stops the spread of contagious diseases and epidemics. That benefits everyone around them. Your education and your health are, without a doubt, massive assets to the rest of society.
Next up, Section 4, fueling economic growth, the macro impact.
So how does all this individual investment translate to national prosperity? If we use India's historical growth as our lens, we see this absolutely thrilling story of economic momentum. Look at the period between 1951 and 2012. The real per capita income surges from roughly 5,700 rupees to over 38,000. That's massive. But look at what happens at the exact same time. The crude death rate absolutely plummets. Infant mortality drops from a staggering 146 all the way down to 42. Life expectancy nearly doubles, and the literacy rate skyrockets from just 16% to 74%. What this data shows us, plain and simple, is that improvements in human capital, like better health and education, and overall economic growth are deeply, deeply intertwined. They constantly reinforce each other, decade after decade.
And this historical momentum, it sets us up for a huge futuristic payoff. Major global institutions are definitely tracking this trend. Deutsche Bank, when they were analyzing global growth centers, explicitly stated that they expect a 40% rise in the average years of education in India. They actually identified human capital as the single most important factor of production in today's economies. It is quite literally the specific catalyst that takes a developing nation and transforms it into a modern economic powerhouse. And this transformation goes way beyond just basic productivity. Having a highly educated scientific and technical workforce stimulates rapid innovation. It creates a society that is fully capable of absorbing completely new technologies. This is the secret sauce, the rich ingredient required to make that leap into what we call a knowledge economy.
Which brings us to Section 5, Capital versus Human Development, a paradigm shift.
Okay, so we've talked a lot about productivity so far, but how do we actually value human life in the realm of economics? This brings us to a major philosophical pivot, the distinction between human capital and human development. Human capital essentially looks at human beings as a means to an end, with that end being increased economic output. But human development, that operates on a completely different paradigm. It's based on the idea that education and health are ends in themselves. They are absolutely integral to human well-being, empowering people to make choices they truly value, entirely regardless of whether or not it makes them better workers. This is a massive evolution in economic thought. Under this human development perspective, just having the ability to read, to write, and to live a long, healthy life has inherent value. Even if a specific investment in someone's education or healthcare doesn't automatically result in higher labor productivity or, increased factory output, it is still an absolute necessity because human welfare itself is the ultimate goal here. Finally, Section 6, the government's crucial role, protecting the investment. With so much riding on the education and health of an entire population, who is actually responsible for managing and protecting these massive investments? Well, the answer is that government intervention is absolutely essential. Why? Because expenditures on education and health have irreversible long-term impacts. Think about it. If a child is stuck in a school with terrible standards, massive damage is done to their potential long before they can ever be moved to a better one. Plus, as individual consumers, we rarely have complete information about the real quality or true costs of these services. Without government oversight stepping in to enforce standards and correct pricing, private providers could easily snag monopoly power and exploit the public. We definitely don't want that.
Because the reality on the ground is that building human capital is an ongoing, really challenging struggle. You see a school being run in makeshift premises, and it just highlights that realizing incredible human potential requires continuous, massive commitments to real infrastructure. Governments literally have to intervene actively to ensure there are quality environments where real learning can actually happen.
Which leaves us with a pretty provocative final thought to chew on as you look at the world around you today. As we keep pushing towards this digital future, implementing IT-based services even in the most rural areas, we really have to ask ourselves, are these modern technological advancements genuinely improving holistic human well-being, leading to true human development? Or are they simply a tool to make us more productive workers, basically just maximizing our human capital? It's a critical distinction to keep in mind as we build the economies of tomorrow. Thanks for joining me on this explainer, and I'll catch you next time.